Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris, and I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. There's the Aussie USD coming to life for sure. You took out some of those lower intermediate term time frames resistance, looking good on the short term. Essentially, we're in buy the dip mode on the short term. However, you still have these higher time frame, the primary and the secondary down. From a short-term trader's perspective, swing trader even, we really don't focus on the primary or the secondary so much. They're just not tradable patterns. From an investor, though, certainly they are. So the time that we focus on those higher time frames is when you're at higher time frame resistance, and I think it's an apropos time to bring them up now, given that you're challenging that secondary pattern. So long and short of it, short-term guys, you're still buying dips. It looks like you tagged support right there short-term. So come Sunday night, I'll be scouting that level for potential buy signals. On the other hand, from a little bit longer-term perspective, you can see you're still at the end of an extended downtrend. So potential secondary pattern shift up, that'd probably be a pretty big deal. But overall, longer term, tough to get too excited about it from an investor standpoint. However, as we've been seeing, since we planted the market put that footing in back in early September, that you're probably in the process of carving out a longer term bottom here. Probably speaks well for the Chinese economy too, by the way, overall. Here's our Swiss franc. Again, if we put the primaries in one market, we're going to put them in all the markets. Primary pattern still up in the Swissy, secondary pattern up. 50-day pattern, by the way, holding up too. There's your 50-day. Came close to testing that this week. So I look for a potential trend line break here. Short-term trader, you're still selling rallies. Short-term trader, swing trader, you're still on the short side. Boy, it's a big difference between a trader and an investor. I will tell you that for sure. Investor, longer term, you're curious, you're following that, you're tracking that level there to see if it holds, but more than not, you're focusing it down around that 93 level for potential entries if you're a longer term trader investor. Thing to keep in mind: the dollar Swiss, secondary up, primary up. Dollar index. Next market. There you go. The dollar index is kind of a neat one because it doesn't look like it. If you take your 50-day box, you're clearly in the lower third of that range. However, that pattern's up because this level's holding, and you had a test of that critical level there in the dollar index. You'd need two closes below it to shift that. So 50-day pattern here still up in the dollar index. Primary pattern, longer term pattern certainly up. Secondary, you can see it. Secondary down, right? So here's another market where your short-term patterns are in conflict with the long-term patterns. Investor, you're just being very patient. If you haven't bought a dip already, you're probably eyeing dips to buy in the dollar index. Peel out to your weekly chart and you really put this guy in perspective. Massive rally. Still been a relatively shallow correction to it. We see that overall as boding well for the dollar index. Obviously, a shallow correction is a bullish event no matter how you cut it. So just another one where your shorter term patterns in conflict with the longer term patterns from both the traders and investors standpoint. You'd want to see that start to work itself out. Those two patterns start to align. A lot of patience in this game. On the other hand, short-term traders are making pretty good hay on the downside here and on the upside in this next market, the euro. Our benchmark did very well on the upside of the last week or so. Had a nice breakout in here and looking good. Another guy where, again, I'm a broken record, primary pattern down, but all these lower time frames higher. Market's on support right there. We'd be eyeballing that for a potential buy signal come Sunday night. On the other hand, if momentum doesn't shift, if you start closing below that level, we'll just back out and wait for a little bit longer term, probably a 10-day pattern line to hold. You probably have 10-day support, somewhere around 112.50 or so. We'll be definitely checking that out. You see our boxes though, that the The shorter box, that's your 25-day pattern that generally reflects day-to-day news. A little bit longer term, lighter green pattern, that's your 50-day pattern. That's significant too. Kind of hard to hide a pattern when you go out 50 days. It should pop out at you. Here you're still bullish. Interesting though, you're almost getting at that point where time is going to shift that 50 potentially. Here's a key level right there. It's not reflected in the index. If I plugged it in there, it'd be say a 40-day pattern or so. But this is interesting. You take that low to that high, it can't get through that level. So if you can't get through that level, time potentially is going to shift that 50-day pattern down. So that'll be something to watch for. Here's the gold market. I pull up the gold market and I'm reminded of why I need to keep these ratios on my chart and why I need to specifically mark out these patterns, because sometimes my pattern will kind of seep into sometimes my opinion will seep into my analysis. I don't want that to happen. I remember here at the time saying, that's potentially a secondary bottom in place. Now, as it turns out, it is a secondary bottom in place. You're very, very close to shifting that secondary pattern higher. Time could do it now. Price could just go sideways, even a little bit lower over the next couple of weeks, and that secondary pattern will shift higher in the gold. On the other hand, longer term, which is where my focus generally is, your primary pattern down, coming up on pretty good resistance, 1220. I think I threw that number out last week, 1220, likely upside target for the gold market. And basically your shorter term patterns would play out. You'd probably get some kind of a climax on these lower time frame patterns. You'd actually shift the secondary pattern higher, which would sweep a lot of longer term shorts out of that market. You'd see some stop loss activity. Stops run would be the trading parlance for that. So potential upside in the gold, a little bit higher there. From an investor standpoint, though, you're just going to sit back and let them run stops and come in and probably short that guy up around 1220. Last market we'll take a look at will be 10-year interest rates. Rates in the States, the actual rate. There it is, secondary pattern higher and holding. That's the key right here, this market. Everything else down. Long-term primary pattern down, like super primary, whatever you want to call it, mega pattern, whatever you want to call it. They're all down longer term. Here's interest rates in the States. On the other hand, that secondary pattern's holding, and you could see it here, a pattern of higher low, higher low, higher low. So that's the big shift we're looking for. It's going to be up to the Fed when that happens, and even your most conservative estimates are saying they're going to raise rates this year still. So that's why we've been that's why we're sticking with that higher time frame analysis, reminding you of those primary patterns, because for all the back and forth in the euro, you look at it, it really hasn't been doing much but going sideways. Well, let's stick with this chart. Interest rates, similar story. You're holding that level. You're holding these horizontal gains. Time is holding up on this guy, and you're getting a little bit of play back and forth. So that secondary pattern right there, really the 800-pound gorilla in the room. As long as you're above there, you're not. You can't open the door to the downside. It makes it harder the closer you get to there. Even if you're good enough to set shorts on these little rallies here, you got to come out of them quick. You don't want to get trapped in there. So U.S. interest rates picture still hasn't changed up to the Fed there, but secondary pattern a big one. Everything else from the short term and the primary is still down there. So that's worth monitoring. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.